Welcome to the Trading Pit, your virtual gathering for sophisticated traders. It's February 1, it's a new month, and on today's amazing show, I'm asking, are there signs that consolidation will ever end? Will ETH finally capitulate against Bitcoin and reach that 0.048? And when is the Fed going to do its first airdrop? I want to know. This is Marconi White. Today I'm joined by two of my favorite analysts. JJ, I'll put you in a chokehold, the janitor. And Benjamin, please give me more espresso. I need it today. I'm going to dive into the analysis with JJ. But first, I want to give a special shout out to CoinCall, who has offered to sponsor this video. Producers, let's take the music down so everyone can hear what I'm saying. Now, for those who are new to CoinCall, they offer a full suite of options, futures, and spot trading for your favorite crypto assets with competitive fees and a beautiful, elegant interface. And if you don't believe me, that's okay, because later in the show, JJ is going to show you exactly what that looks like as he goes over his highly profitable DGen trade of the week. It's amazing. All right, JJ, I want to turn it over to you. As I do, I'm going to ask, what is the mood of the market, bull, bear, or something in between?
I think it's a bit boring right now. So yesterday we had a little bit of fireworks.
That's the sound of the boring market coming after you for not giving it enough joy. All right, break it down. We've had this now at least twice. We went from bear, now we're in the boring territory. What's giving you the impression?
It's just, chop back and forth. We're kind of in a vol sellers market right now. That continues to be a profitable trade for the people executing it. Just you can continually sell both sides anytime we get overheated and capture that volatility on the mini spikes there. What we saw yesterday, we had a nice run up before Powell's speech and then quickly reversed, lost the 50-day moving average into the monthly close, which isn't typically a good sign. So it looks like momentum's fading. Looks like this might be a higher high. We'll have to see how today goes ultimately, see if it can regain some of that momentum it lost yesterday, re-break above this 50-day moving average and start trending up again. Still holding on to the 50 RSI mark here, barely. So if it can start to trend again, that would look good. But we need to see some confirmation from the New York session today to really feel bullish about that. Need to move back above 42.8 or so to feel confident that this washout was as bad as it'll get. Like we see here yesterday, there was just tons of longs wiped out. So people were over leveraged into the event. Never a good idea when you have Powell speaking to be leveraged one way or the other as the market typically whips around.
Man.
So
Were these people not listening to our show? They were just getting off sides, getting too excited?
Evidently not. We had that nice pump early in the week, and then as these things typically do, they reverse shortly after the speech. So we saw about 30 millions of longs wiped out here, and basically these two candles, boom, boom. And now we see so if we go look at the net longs, net short positioning here, we see that shorts were entering. They have been entering basically over the past 2 weeks. Net shorts have gone up over 4,000 in position, as where longs have dropped by over 5,000. So it seems to be kind of over tilted to the short position currently. So we could get that move up, liquidate some. Benjamin will get into the liquidation charts to show kind of the key levels for that. If we do get a move up, one thing we should keep an eye on though is these ask walls that have been forming here on Coinbase. So for any momentum to sustain, we'll have to see some buying here. We see a little bit in the pre-New York session happen in this green candle here. So we need to see some buying continue. Ultimately, these ask walls to be removed. And that would kind of clear the way for liftoff if we are to regain momentum there. So keeping an eye on things. It's basically a level situation. DXY is still running hot, which we'll touch on later.
Yeah, let's come back to it. Okay, so what I'm hearing is we don't really have too much momentum either way on the spot side. We've got those buy walls, I guess, that could take off on Coinbase. On the perp side, we saw, I think it was the last time we met, we were talking about those washing out, helping with some price movement. And then we just saw a bunch of longs get liquidated, as you noted. So they're not really positioning either way. And so we haven't really talked too much about options, but as you're saying, it's kind of a boring market. We're not seeing too much movement either way. And have you had a chance to look at ETF volumes? Because, if I think about where the spot volume is going to come from, we've got the whales, perhaps ETFs having to accumulate more, and retail coming in. I know retail hasn't arrived yet. I think that's kind of fairly well established at this point. On the ETF front, I think the volumes are starting to slow a little bit as expected. And then we've got the whales that are positioning long. So if you break those three down, do you see any impulse that's going to come in here and help with some of that momentum?
Everything seems pretty neutral. So looking at options again, we have an expiry tonight. The max paying price is 42,000, which is right around where we're sitting. So basically, at this point, this is where the dealers make the most money. So it's kind of looking like it's going to be pinned there for expiration. If we go out through all of these major February expiries, so next week's another 500 million roughly of notional value, max paying price 42,000. February 16th, max paying price 42,000. There's kind of a repeating pattern here. So February 23rd, over 2 billion notional expiring, and that max paying price is 43,000. So I wouldn't rule out the possibility of price just remaining in this boring back and forth consolidation pattern. We see wicks up, take out some short liquidity, wicks down, take out the long liquidity, and it's just it might just be a very boring month here ahead while we wait for some decision from the macro.
Okay. Nothing that anybody who's listening to this wants to hear. Benjamin, help us out here. Give us some hope that we're going to see some movement either way. We've talked about a liquidity event that perhaps could be happening with the reverse repo. I know we'll talk a little bit more about that when we cover the Dixie. What about within the crypto market? Are you seeing anything that could suggest we start to see some movement up or down?
No, it's still difficult. We are still dabbling around the yearly open value. That's around 42,400. We're neither able to convincingly close below nor convincingly close above. So it's kind of like married over in that zone for the last, like 2 weeks, I'd say. So it's tough here. It's tough here because when you get the Coinbase premium, then there's a little bit of strength and price tries to goes up, but it finds it hard to break the 44 levels, and then once again dumps back down and is trying to hold the yearly open levels, but struggles once again as well because I think now it is starting to get a lot of uh, impressions from what's happening on the macro side. We saw that yesterday that there was a little bit of um, fake out moves to the downside, and then it shot up completely, reversing all of the downside. But once Jerome started talking, it didn't matter. Everything dropped. It started hitting the reality. So I believe we could see a bit of a correlated market to stocks for a few weeks. If the Coinbase selling discount doesn't, like disappear, yeah, like it's still trading at a discount. So that's not so great for bulls. If you want to build up a solid position for swinging, no, that's not a great idea. So it's level to level, range to range, and we need to see 40K broken to be ultra bearish. There's liquidation levels still around 40K area, 4,500 and 4,800, I think. So we need those levels to be taken, and then we can think about bearishness. But it's neither too bullish because 44K still acts as resistance, and 44 to 46K is still a gray area. Like you can see a huge fake out move in that area and then completely retrace down all the way down to even 35K. So it's hard to say which one it is. But that's why over here, when the range matures and when you are having a range that has been existing from December, right? So this is almost from mid of December, we've been having this range and we think about it. So it's going to expand when the range breaks out. I don't think it is just going to keep doing liquidity hunts when it goes in that direction. So let's say if it goes above 46K, I think this runs to 52K or so. And if it breaks 40K again, it probably runs down to 35K or so. Because the range has matured quite a lot, and a lot of people get comfortable to take up mean reverting positions at the extremes of ranges, and that is when it will start hurting. So for now, we need to see in the interim how the intraday trades play up. Local liquidation hunts like what we see in the liquidation levels chart. So it takes the levels, runs up a little, takes out some more levels, and then retraces completely back down and keeps rinse and repeat. Because I also look at Sol as a market momentum metric. So because Sol and Link were the leaders in the alt rally and also, in fact, with the BTC rally. BTC rally was getting triggered after that, Cointelegraph in turn posted that fake tweet or whatever about the ETF
The
news.
paid tweet. The paid tweet.
Yeah.
That's what we know. Let's be honest. We know what it was.
Well-timed coordination.
Yeah,
Yeah.
that was
All
that was
right.
a
Sorry.
wonderful Kickstarter for the market. But
Uh,
even at that point, you saw Solana and Link actually break out of their consolidation, and they started to run from 7 all the way to 15 for Link, and for Solana it started to run. It did a 4x or 5x, which was fantastic. Given that, like, we're not seeing a lot of momentum continue on those tokens which were the leaders, right? And we're probably seeing some tokens like Jupiter, which is new, coming out with airdrops, those type of scenarios. But it's not really an alt season either when BTC consolidates. It's not really an ETH season either, because ETH does a sudden upside move and then basically bleeds the whole way down on ETH BTC. When you look at it, it's going nowhere. And a lot of people are so exhausted trading ETH BTC and the betas to ETH BTC. And if you say that, okay, we have ordinals and those sections which are probably doing well, then that's not true as either, because ordinals, RATS token, or BRC20s, all of them have been cooling down as well. So it looks like whether it is the alt market or whether it is the main market, everybody is looking forward to some information from elsewhere to take a stand. And I believe
Yeah,
it
we need
is
some new.
not even about, it is not even about grayscale right now. I think people are like, okay, it's fine if they sell another 100 200k BTC, because there is at least someone like the ETF issuers who are still issuing. They've not stopped. They're still issuing ETFs, right? So whether the volumes go down a little or continue to go up, or the net flow is equal or a little net negative, but they're still issuing. So there hasn't been a day where these 9 ETFs have not issued significant volume above 100 million.
yeah, actually,
So
I was going to see if perhaps JJ, I shared a link here in the production studio. If you'd be able to bring that up, I think it's a chart. It actually shows the net inflows into ETFs.
Yeah, let me pull it up here.
Yeah, so I want to have a look on that. Because if I'm not mistaken, it suggests if you go to the bottom, we have over $1 billion inflow. Obviously, Grayscale, it's had a massive outflow, and it looks, but I mean, on net, it looks like that's just been redistribution to the rest of the market.
The thing about that too, you have to realize, is that a lot of people sold their spot holdings to buy the ETF shares, right? Like they no longer wanted to have personal possession of the BTC. It's just easier to give it to BlackRock or whichever issuer. So I don't think that's necessarily reflective of 1.3 billion of pure buying power. I think a lot of that is just kind of a shell game where it's like, okay, I move from my spot Bitcoin, sell it, buy these shares. So how much
and
that
it's
actually
not
is?
clear what percentage of that flow is basically BTC based movement, or it was fresh purchase of BTC in order to back it up with an ETF issuance. So this is the transparency problem that we are going to go through as ETFs grow. Like, okay, there was an inflow, but was it actually BTC buying, or was it purely someone with, like, let's say they have BTC from Mount Gox period, and they're just parking it into ETFs. So,
Yep.
which is really possible. So it's very difficult to say that.
So, okay, I want to summarize where we are here. You didn't paint a boring, I guess you painted a boring picture, Benjamin, just which is confluence with what JJ you were talking about, which is that, if we look at we don't really have any real momentum happening right now in the spot market. Options are suggesting that there's max pain is basically keeping everything compressed within this range for the foreseeable future. And then on the perp side, maybe a little bit of bearish sentiment, but not really. So everything is just really kind of settled down, and we're looking for that outside catalyst. And if we look at the ETF to the point you guys just made, we're not really seeing net. We don't really see something that would suggest, yeah, this is a lot of net new inflow coming into the market. So the ETF isn't bringing that, and we're not seeing it on the retail side. So I think at this point, I think it's safe to say that, until we get some kind of other impulse we're really not going to break out of this range.
Just chopping, yeah.
Yeah.
It seems like the market's waiting on one narrative or the other.
Highly be what happened in last year when we had the banking issues, right? So it could be a repeat of that situation that could drive up the price a bit, where the narrative that, look, BTC is still the king when it comes to holding up your assets in a safe way, holding up value proposition long term. So this is better compared to holding your assets in a bank, which is basically getting screwed. I saw this bank which purchased
the
a
technical
signature bank
definition for
completely getting
insolvency.
screwed. Yeah.
Yes.
So
Well, yeah. So I think at that point we're looking at external, as you just said, external impulses, which is transfers from TradFi coming into the crypto space, right? It's nothing net new generative from here going out. It's really, to your point, the banks have gone down. Perhaps if there's an interest rate spike, which we talked about in the last show about this idea of a liquidity Armageddon, where the reverse repo kind of goes down to zero. There's a liquidity crash and rates just they just jump on the 20 and the 30 year, causing all kinds of market panic. Then you're seeing people look for alternatives, which could actually be a sell-off initially, and then the narrative starts to build steam about these are actually the alternative assets, right?
Yep. Which is why a sell-off still makes sense. The difficulty is about timing then, because dollar index is also going sideways right now. Like probably not. It's hard to say whether it's sideways, but it's like a solid trending sideways, we could say. And we do not know whether it is just going to mean revert here. And if it did not mean revert after the FOMC, I don't think it's going to mean revert here. I think it still has scope to go up. So given that nature and given what we see with stocks and everywhere, so just need to wait and see how this is going to play out.
Okay. I think if you're looking for a fractal, it's probably similar to August to September right now. Like just this constant back and forth chop after we lost momentum in the summer. You see how there's just basically price made some volatile movements, but within range. That's probably what we're looking at now for the next couple of weeks, barring some unforeseen catalyst happening here.
Well, when we talk about catalysts, we're always going to talk about the Dixie. So I want to pivot to that in a moment. But first, let's talk a little bit about let's see what the market is showing. We've all been doing about sort of pre-market. Let's actually take a look at some of those stocks. Before we do that, JJ, just want to take a look to everyone who just joined us. Thanks for joining us on the live show. We'd love to have you here. If you haven't already, hit the like and subscribe button, the notification bell if you want to hear about this. We are every single Tuesday and Thursday, 9:15 a.m. We go live. But to get all of our content, you definitely want to hit the notification bell. JJ, let's look at what the market is saying now. Are we seeing anything on BTC, maybe some of the derivatives like Mara? Can you bring up some of those charts and to see as the market's opening what it's saying?
It's made a little bit of a move up here. So earlier this morning, we were around 42,000. Last night, we were below 42,000. So we're right back in that mid-range, trying to make another run at the 50-day moving average, which is around 42.9. So that's really the key spot for momentum. I think if we could flip above like the yearly open level, 42.5, followed by 42.9, we could see higher highs as opposed to yesterday. We could take out 44, 44.5, maybe see if we can catch a bid there. But it's really dependent on those levels flipping. So this is still probably just chop territory. Like it's probably likely we go back to 42. Bearing a reversal from Dixie, looking at some of the stocks, they look all about flat, slightly up to flat. So we see Mara's up like 2%, MicroStrategy's up about 1%, Coinbase up 1.5%. Typically, those are a lead indicator, so that could be a sign of bullishness for Bitcoin today if these continue to trend upwards. Dixie looks like it's
still pretty flat. Yeah, I was going to say it looks pretty flat across the board. I guess what's your read on that in terms of the market digesting the rates not staying flat, right, from the Fed? Do you think I was just anticipated, therefore there really isn't any movement today?
Yeah, I think yesterday people probably got overly bearish. There's probably a lot of short-dated put options that opened after yesterday's mini crash. So they're probably just cooking the IV out of those for now, and then we'll see the real move later today or tomorrow on these stocks.
So everything's looking flat, which is exactly what we just talked about pre-market with everything looking boring. But we do know that there could be a possible change if the Dixie rips higher, rips lower, or we see the liquidity event. So let's transition. Let's talk Dixie.
So looking at it here, it looks like it's kind of found this consolidation range, not unlike it did in earlier January. Leg up, consolidation, leg up, consolidation. It's still right around that 200-day moving average, so that's going to be pivotal. If we look at this chart, this actually looks like a massive head and shoulders forming. So maybe we do get that reversal. Let's look at, zoom out here. So it's still kind of in a downward trend on the weekly chart, right?
Mhm.
So it still hasn't broken above this key 50 RSI mark we keep talking about. Made a run up there yesterday and then it reversed. So I kind of see like 104 as the key line in the sand. Like I think if it goes above 104, we're probably going to see it run hot and make a move similar to what it did in September. But it's really key. That's a key level for it to flip. As far as I see, like that's a spot where we could see that liquidity crunch, dollar milkshake theory play out. But if it reverses from here, on the flip side of that, let's zoom back out. So if it loses like this 102 area, if it takes out the lows from last week, goes below there, I think that's a pretty strong risk on signal, most likely. So while it's in this range, just kind of keep an eye on it, see how Bitcoin behaves as well. But this is kind of a no decision range, like between 103 and 104.
Well, JJ, I want to come back to a comment I think you made several shows ago. You were really looking at the monthly close for the Dixie, and I think you were expecting to have something directional, something that was going to give you a strong indication of where it may go next. Based on your commentary right now, it sounds a little, for lack of a better word, we're still waiting. We're still waiting around. So is this? Are we looking for next month or the weekly close? What are you looking for?
So it closed above the 200-day moving average on the monthly. So I was expecting some more follow through from there. We still might get it. So let's see what it does these next 2 days, really. But I was expecting that to make a move up to 104 from there, and it hasn't. So that's kind of the market sending you some kind of signal there, right? What it is, who knows? Not to say it can't go up there tomorrow, but it had every reason to go higher yesterday, right? Like the market was priced for full dovishness from Powell. He basically reversed that and said, we'll cut rates when we feel like cutting rates, when we see things inflation down adequately enough. We'll tell you, but it's not now. It might not even be March. So if you think about it, Dixie had every reason to move up higher and it didn't. So that's kind of when you have that kind of catalyst there and the market doesn't follow through, that could be a signal. Not to say it won't go in the next couple of days, but it's something worth monitoring, especially if it reverses from here, right? So if you have the most bullish scenario for an asset and then it doesn't make that move, you have to think twice about your kind of assumptions there. So that's really what I'm watching. But I see 104 as the key line. Otherwise, 103, slide below 103 could be very bullish.
And heading into this reverse repo, I didn't get a chance to look into the comments. Did we get any? I did see a highlight somewhere suggesting that the reverse repo didn't necessarily have to go to zero. Did you hear anything about that? Because I know that tees up this sort of liquidity Armageddon event that we talked about, that going to zero, the Fed pushing for the market to take up more of the supply of whatever assets are on its balance sheet. Did you see any commentary around that?
Yeah, I listened to the speech. He was pretty clear about that. He said that's not a condition for them to do anything one way or the other. It's something they monitor. But he just kind of took the political stance there of it's not necessarily a binary decision based on what the reverse repo does, what the Fed decides to do. So
a political position,
mixed tones. Yep.
Yeah, a political position in a political year as the U.S. heads into elections later on, which we won't really be commenting on. That's not really our bailiwick, so to speak, but it is something I think to be aware of, just knowing that those kinds of events obviously can impact the reaction of either the political institutions like the Fed or the dollar and, the other countries that are buying into the dollar, the Dixie.
If the market cares, you have to care, unfortunately.
That's right. That's right. Benjamin, any perspective there on sort of breaking above 104, breaking down below 103? Anything in the charts you're seeing there, maybe sniffing that out?
So, the rudimentary way I was looking at Dixie, because, there's no solid metric to put in additional models on top of it. So the shitty RSI is what I was looking at on a daily level. And I see it still has scope to go up. So typically every time it goes above 70 or 75 and then reverts again. So I see that we are sitting somewhere around 65 or 60 or something, and there's scope to go up. And it could also go down and touch the 50 level and then go up or just dump from here. So there are still three possibilities, but the thing is, there's still scope to go up, which is why I think the bearishness in everywhere is probably not done. The downside is probably not done. But it's a question of whether it decides to go up from here or correct a little and then go. If that is the case, then if it corrects a little and then goes up, then we have a chance at 46K, which is why if someone is shorting 43 or 44 here heavily, with the perspective that you could reach low 40Ks or low 30Ks, then that's a huge risk proposition because Dixie might just decide to just correct all the way down because that's coming sooner or later. It's a question of whether it is done this week and we have a rally for 2 weeks in Feb, or is it done in March and then we just drop dead. That's the hard part. So how long it will go sideways?
Yeah,
Good
if you look
question
at like how it does after it loses the 50-day, after holding it, we see some pretty strong sell-offs. So, or I'm sorry, the 50 RSI mark on the daily chart. So we see it lost it back in July. We see all this massive sell-off. Lost it back in June, massive sell-off. So if it does correct below there, I think we could see a pretty strong impulse from BTC, but obviously that's pretty far away from these levels. So what you'd really look for is obviously wick down below 103 and then continuation, maybe a slight bounce up and then just lose this entirely. See it on the daily or weekly chart too, just how it performs when it gains this 50 RSI mark. You see these massive legs up, and that's when things get really overheated, as we saw in 2022, earlier in September. And then when it reverses too, that's the strong sign to sell off. So it's just at a maximum and decision point, as is Bitcoin. So it's just kind of this boring chop market. I wish it was something different, but you got to play what the market gives you, and that's what it is now. Like you see it in the IV levels too, right? These continue to bleed just because there's no decision. And when there's no decision, price is just chopping. That becomes a perfect time to sell volatility and capture that yield because price isn't going to break out of its levels.
Well, I do want to transition and talk a little bit about some of these trades. Before we do that, I do want to say, so, I mean, everything that we're signaling right now, this is a period of consolidation. We don't really have that impulse yet to make a change. We're going to continue to monitor that. If you want to know when those changes are going to happen, I suggest you check back with us every Tuesday and Thursday, 9:15 a.m., where we're looking at the pre-market and the market. And next, we're going to be talking about some of these trades. I want to go over the DGen trade that we've looked at a couple of times, talking a little bit about the volatility. But importantly, Benjamin, since you're here, I want to make sure that we bring up the screener and also really touch on the question that's been on people's mind of when will ETH BTC finally capitulate, or will it? Because I know that's something that a lot of people have asked us about, and a lot of questions since it hasn't happened yet. But before I do that, just if you're new here, if you just joined the live stream recently, hit the like and subscribe button. That's the best way to support us, because I know everyone here wants to support the channel, want to continue to have this great content. If you want to go a step further, you can always sign up to CoinCall to trade options or spot or perps. And if you're new to CoinCall, it's a fantastic exchange with a beautiful, elegant interface that you're going to see in just a few moments. And obviously competitive fees. JJ is going to show you exactly what that looks like. And it's a great way to get your trading going, as well as support the channel. And with that, getting through, we don't want to do all promotion, but with that, I want to come back, and JJ, I want to talk through the trades. Let's go over the DGen trade before we start talking a little bit more about perhaps some other trades in the alt market.
Okay, so into FOMC, we basically said continue to hold those deep out of the money February puts because they basically became a free position based on the premiums that we got from selling the 41,000 put or 41,000 call after it got in the money earlier in the week. We said don't hold that long exposure, obviously, into the event because we were expecting some kind of chop action like we're seeing now. So here we are back at square one. I think you just continue to hold these puts. If they expire worthless, you lose that premium, but you already made it back on the calls and the puts we bought earlier in the month. So looking at it now, what way would I play this into February? So let's take a look at some out of the money calls just in case we do get that move up here in the next couple of weeks. Say Dixie breaks down. I think these 44,000 calls for February 8th could be worth a try. And I would basically, I think it's only because invalidation is so close. So if we lose yesterday's lows around 41.7, then just cut them. You would take a small paper cut on the premium there, maybe lose a couple $100, and then you still have that hedge protection on the February 22nd puts that don't expire until later, so that premium would start to gain. You could sell those calls for a slight loss, but I think that's worth a small gamble here into the next 2 weeks in case Bitcoin does get that momentum, makes a move up and takes out that liquidity pools higher. So I think you could play that. They possibly get in the money if we get a nice short squeeze here.
Now, is this just trying to trace a trade? Would you recommend, as much as we want to show the great interface for CoinCall, is this a good time to be sitting on your hands and waiting for some direction? Or is it still just as easy?
That's gun to my head.
Absolutely.
If I have to pick a trade, it would be that. But right, like we were discussing, there's just not a whole lot of interest in options. There's not a whole lot of premium in it. It's just when we'll see the decision come from options markets, and it basically follows DXY too, not surprisingly. So we see when DXY topped, volatility basically bottomed not long after, back in October. So I think the options market's waiting on the same things we're waiting on, right? And you see DXY bottomed, volatility topped not long after. There's also this inverse correlation here, and the options market is basically waiting for a decision from the macro market one way or the other to start placing its bets. So right now you're just trying to capture small premiums on these mini moves within range.
So this could be a good way to start testing the waters, getting familiar with options if you're new to the area, if you're making sort of smaller plays or even doing paper trades. But definitely, I think that the messaging from us is probably a good time to sit on your hands. But
Play
that doesn't
small.
mean
If you're going to play it, play small.
play
You know,
small.
like I'm not saying go out and buy 20 of these contracts. It's more like, okay, you buy one, maybe you
That's
double your
right.
money. Yeah.
JJ isn't
And wait
saying
for
it's like
Pablo
YOLO. Yeah.
Wait for Pablo alert.
Wait for Pablo alert. Okay, all right. So I want to get in then to more of the alt market because that's a frequent question. So the first question I want to ask, Benjamin, I'll start with you, and then JJ, you can obviously chime in here. When are we ever going to see ETH capitulate against BETH? Is it going to hit the recent low 0.048? What's your perspective on that?
So there was this metric. I don't have it at hand right now, but there was this metric I was looking at in Dune dashboard last week on rolling 30-day accumulation of TVL, in which chains it is happening. Okay, and ETH was at the bottom of the barrel of all the L2s and alternative L1s and all of those. ETH was at the bottom of the barrel. So when the tourists are basically in chains other than BTC and ETH, especially if they're in Solana or Ejective or Metis, or there's so many tokens, so many L1s and L2s who are pushing on airdrops, who are pushing inscription projects, who are pushing NFT projects. So whether the NFTs do well or not, there's incentives for these TVL tourists to keep going into other chains. That has to change. So those tourists will have to start pushing in funds on this side. And when that accumulation starts to happen, we'll have a better view on, what will happen with ETH with respect to a huge price move or not. So right
TVL
now, what is
tourists,
basically happening?
Is that what you call them? TVL tourists?
Yes.
Oh man, we
Yes.
just coined a new term. I love it.
That's a great term. Everybody's in search of the beta, right? Like it doesn't perform as much as it did in previous cycles, and people are just chasing.
No, the game is very simple. Like, let's say you are someone, let's say you're a small fund or you're a good trader who made quite good bucks last cycle. You have a few $1 million, let's say $5 million. You basically go from protocol to protocol, layer to layer, because they offer you incentives. You can farm there. Just go and trade on Vertex protocol, GMX. You saw what Andrew Kang used to do the entirety of last year. So it did not matter that he was taking leverage positions, but he was able to do a lot of volume. He was able to bring a lot of people to that particular protocol or decentralized derivative or that particular narrative. And he kept jumping from one exchange or one protocol to another because there is someone new coming up nonstop. So in such a type of a scenario, you don't have to stick around on ETHL ones waiting for your Aave or maker-based, debt or pools to give you 3% a year. There's no incentive. You'd rather go humping around in all chains and get airdrops which you cannot even value right now. There's so many airdrops which you cannot value right now. Is it a lot of work? Yes, but that's why these people take up the approach of trading, right? They go into ecosystem where there's some swap, where there is some trading opportunities. They just buy sell, even though they have zero idea about trading sometimes. They just buy and sell and buy and sell and increase the number of transaction counts and volume and get rewarded at the end with airdrops and then go to the new protocol. This keeps continuing, and ETH has to show up and do something because it still keeps getting drained in TVL and trading volume, swap volumes, everything. So when we see a shift from those two risks, we'll have a better idea.
Okay, so I want to summarize the point here and make sure I understand what you're saying. We've got the TVL tourists. So you have people that are moving from chain to chain, just hunting for some of that liquidity, looking for the airdrops, which is sort of leaking out demand across chains, and ETH isn't really benefiting from that demand. And you're saying once that activity starts to draw down, you can start to get a better idea of when ETH can finally, I guess, land and get a movement. So that sounds like that's when it's really going to spring forward, I guess. But if I go back to the original question, it was, when do we think ETH BTC is going to bottom? So do you think it already has, and this would be the springboard moment, or do you think the TVL tourists leaving the market is actually the opportunity for the final capitulation?
The actual springboard moment will come when there is clarity on the TVL tourists. I don't think it will come any sooner. I don't think it would be price alone going up a reason for the TVL tourists to come in. Because this month, for instance, after the ETF or probably close to ETF, or we were rallying to 2,700 or something like that, there was a narrative, there was incentive, and people were coming up with some forks and mergers and all of that as narratives. They were trying to push in, but tourists did not flip. So price tried to move up. Everybody counted on other betas to also move up, but then look what happened. Everything dropped 30%, right? So it's not holding up. Even this week, after the move up on BTC all the way to almost 44K, right? ETH was the last one to move a little bit. It was going up from 2,200 all the way to 2,350 or something like that, or 370 or something like that. And expectation was that it will break and run to 2,600 or 700, or at the very least, reclaim 2,400 in a healthy way. But look where it stands. The moment BTC started to drop, it just followed. That's primarily because there's not much activity around it. So it's just following in a lagged manner. So it doesn't even have to capitulate. ETH BTC doesn't have to capitulate and go all the way down to 0.2 or something, because BTC is not that strong either. BTC is also in a 45-day to 60-day consolidation zone right now. So when the strength is just a matter of time frame that you look at, when both are technically weak and one is just slightly weaker than the other, so there's nothing much you can do. So you have to look for strengths elsewhere. And those strengths elsewhere are sitting on the other L1s and L2s.
Well, I want to come back to some of those trends, and I know you have a screener. I want to bring that up in a moment, but I just want to get some clarity on what you just said, because what I'm hearing is we may actually be at the bottom end of the range for the ETH BTC as it is. There may be some additional room for it to wick down or go down further, but it doesn't necessarily have to go down a lot weaker than it is right now. And then JJ, I do want to bring up, because I know we talked offline about maybe your thoughts on why ETH just in general isn't getting much of a bid when we look at the options market. But but coming back to ETH BTC, we may not see a wick down. If we see a wick down, yes, that could suggest that it's the end, but we have to see the end of the TVL tourist moving around the market. Is that right, Benjamin?
Yes. Plus, if you go based on the ETF narrative as well, there's still high confidence that ETF will get approved this year, be it May or later on. BlackRock is confident, and the entire market was expecting that once BTC ETF comes out and then there's a correction and then ETH BTC takes over, because you have a narrative, right, from Pentoshi to everyone, really hope that would be the next narrative to play, not because it makes sense or not, but that's because people will speculate on that narrative. but it seems like nobody gives a rat's ass on it, and that's why you have rats token on the top of the screener.
Yeah.
Yeah.
That's the thing about mercenary capital, right? Is they just follow the incentives. So if whatever chain that's, two guys running it on a computer somewhere that's not really decentralized at all, if they offer you free money to use that chain through airdrops, people are going to use it. And like, we haven't seen the real use cases of ETH really jump. Like, there hasn't been a ton of use of them recently. And I think that'll come like as these ETFs roll out and whatnot. Like, BlackRock will be incentivized to make sure that ETH is being used by real capital for real things, like the real world asset narrative. All those things will come, but it's just not here yet. So it's just kind of a time-based capitulation I see on ETH happening currently.
What? Okay. All right. So I think we've got a couple of perspectives there on that answers that question about, does ETH have to BTC have to capitulate, and what it would take for it to actually springboard and move out. I want to come to the options question in a minute. Benjamin, you were looking at the screener. I want to take a look, deeper look at this. So for the audience who hasn't seen this before, and I think this one looks a little different, a little cleaner than what we showed last time. Can you walk us through what we're looking at here?
So we started theorizing a few months ago that if we screen out a lot of noise, in the sense like tokens which are with low open interest or low volume, and just focus on tokens which are basically having interest, growing in a little bit of open interest, and consistently having a bit of volume, and based on a few other magic masalas, as we could call us, we can determine the list of tokens that you have to either day trade or look at swinging or look for breakouts. So even if you are a manual trader, someone who uses ridiculously rudimentary tools in order to trade, or just someone who trades on your Bybit app for that matter, you could use this tooling to determine where certain tokens stand. So if it's in light red, it is bearish, but not heavily bearish. If it's dark red, like Pepe, it is quite strong bearish. If it is light green, then it's okay. You can trade bullish on it. If it's dark green, then it's really good. You need to be bullish on it, like strong bullish on it. So we came up with this coloring options, which makes it easier for people to just look at a color of a token and then realize, like, okay, everything that is in white is basically neutral. It's potentially in sideways, or there is indecision. There is no point in taking up positions over there because nothing exciting happening over there. So the odds of you having a good risk reward trade is very minimal. So you wait for one of these colors to pop up and then look at your favorite metrics and decide whether it is a trade to take up. And when we filter and sort it out based on high volume by open interest ratio, it helps us also determine what are the tokens which have right now very good volatility or having a lot of interest, whether it is from MMs or from API traders or whoever for that matter. And that's why if you see RATS being a token, it is basically a BRC20 token. SATS is also a BRC20 token. All of them are trading at 7 times the volume than the open interest. The open interest on these tokens is like 6 million or so. So there is no chance you can take up even a solid 200K sized position on these tokens. But that's where the money is, because it's pushing up the price up or down, and there is interest amongst people who want to go in and start trading it. And if you look at tokens like Sol, it is trading at 4 times the open interest, for example, on Bybit, and which is fairly good, but it is on sideways. There is no decisive trade out there. So the number of tokens with colors over here is very minimal, which means the entire alt market is just on sideways and waiting. There is no solid edge on taking up a sized trade. So typically you need them either on a lot of orange and red or green and dark green. You don't want them on white. So this is something to just help out our users that who already have access to such screeners and make their life a little easier on what they could trade.
Common theme of today's episode. Everything's just waiting.
Yeah.
It's just waiting.
It's a good time Yeah, it's a good time to sit down with your Xbox and a apple juice and just wait around on your hands.
Well, it's a
Okay,
good time to start plotting out what it will look like when we do eventually see the range break one way or the other. And
that's right.
that's really where your fat
Well,
pitch comes from, is being ready to get into position when that does happen. So just
so
because it's boring, can't check
JJ,
out.
I want to. Benjamin just painted the picture, I think, for where ETH could potentially get that slingshot bounce, and a couple of factors that have to come into play. Offline, we were talking a little bit about the options market and the impact they may have on Ethereum. Hopefully, you can remember that discussion a little bit, because it sounds like you may have a thought on why that may be impacting some of the price.
Yeah, there seems to be like a systemic supply of volatility on ETH. And this is probably due in large part to things like staking vaults, which you basically deposit your ETH and then it sells calls and puts against that ETH position. So you basically profit if ETH goes nowhere, as it has been, and people just get these yields consistently. So anytime ETH makes a mini rally, we just see a rush to sell that upside. And since they're covered calls, it's not like people naked selling them. They can't really be squeezed. So ETH just kind of stays in this same boring range over and over. And it's just really waiting on a catalyst and an influx of new demand for it to break out. Because as long as it's just the same people selling their ETH upside over and over again, it's just going to be stuck in here for the foreseeable future. I think the ETF will probably be that narrative, but we're still, think of like the Bitcoin ETF, how long that took. We all knew it was inevitable when BlackRock filed, basically. If you weren't 100% certain in June, you were 100% certain in August when Grayscale won the SEC case, but Bitcoin didn't break out until October. So we know the ETH breakout is coming at some point this year, but how long it takes for that to actually happen, it seems like the market's content on waiting until the last minute here and trying to take out as much supply as possible in the interim.
So I want to go back to the mechanics of what you just described, because it sounds like it could actually work against bringing, the market. We just talked about a redistribution on the Bitcoin side of it, where perhaps people are selling their Bitcoin because they don't want to self custody, and they're using that to just buy into the ETF. Get rid of that headache, pay a small administration fee, and still get the exposure. On the east side, you have some other options for getting yield, i.e., you can stake. So if you do that, if you get rid of your staking option because you're no longer holding the ETH and just buy into the ETF, you don't really get that option.
No, I mean, it remains to be seen. They might roll out an option like that where the ETF basically offers dividends and whatnot. I would imagine they will, and they'll probably stake a large part of that. But who knows? Like that could take a couple of years for them to get approval and whatnot from the SEC. So that does remain to be seen.
Could you imagine that impacting demand, or is it the case that so much of the demand is going to be coming from TradFi, people that don't have existing exposure to Ethereum, that they're going to then have a way to just bring in net new demand to the market and into that product?
I mean, over time, that kind of creates a perfect storm. Is if they stake a large portion of that, if not all of it, right? Then you have a lack of supply on the market due to it being staked, and all of a sudden you have this new influx of demand. So as people start buying these ETFs, it becomes a self-fulfilling prophecy. There's less supply, more demand because price is going up. It just becomes hype. Like that's when you really see all of the narratives that people were focused on post-merge with ETH. That's when they come to life, and you really see that it take off. And I think that's a matter of time, but it could be, month, years.
Yeah, but that version of an ETF is probably something that comes few years down the lane. I think it will take time. I don't think it will be an ETF that will launch this year or next year. Whether a spot ETF launches this year, that's a different question. It probably happens. But, I don't think the yield type of ETF comes in anytime soon. I think they probably want to milk as much as possible on the BTC side first, because they've invested so much time, money, and effort. So if they start pushing out competing ETFs, which is actually doing more yields, wherein you're already getting diminished returns on BTC, as far as the market cycles are concerned, then it makes it difficult for them to sell their own narrative. So I think they will not bring in a staked version anytime soon. But yeah.
Yeah, they need to have the success case with Bitcoin first, basically, and then the marketing plan for ETH can roll out from there.
Okay, so
like the beautiful thing about this is that ETH is giving you so much time to accumulate, because I think we're all pretty certain on where it's going long term. It's just a matter of when,
Well, I want to hit on that point because we had a question from the audience, which I think is good. Ali Alba, question about the Ethereum ETF not happening because of the Howey test. Therefore, is it not possible for Ethereum to become an ETF? So I want to talk in terms of probabilities here. So we talked about the market narrative is that it's going to happen. This ETF is going to happen. Would you put that in the 80% likelihood? And then
Yeah, I would
respond to
say
this
80.
question about this Howey test?
Only I'm not a legal expert, but here's the ruling that the SEC made on Bitcoin: is they approved the futures ETF, and they said
Yeah.
you can't deny spot if
Exactly.
you've approved the futures. They've already approved
Exactly.
the ETH futures. Now
Yes.
BlackRock's file. It's not like some mom and pop shops filing for this ETF. It's BlackRock, right? Like they have whatever 99.9%
Yeah,
success
that
rate.
is the case. Like if you approve the ETH ETF on future side, there is no reason you should not have, a spot ETF.
Mhm.
That was the case filing, judgment as well. So that's why they were able to push this through. Otherwise, there's no reason for a shitty trust like GPTC to end up becoming an ETF.
Yep.
And
And what's the SEC going to do? Like fight this in court, spend
Yeah,
millions and millions of
yeah,
more dollars
yeah.
just to lose again? Possibly.
during an election year.
Yeah.
I mean, they
Yeah.
probably file and then just capitulate in a month or two,
Yep.
but it's not going to matter.
So, okay. So then you guys would both say 80% chance of approval for the ETF.
If not
I mean, if
higher.
you go
ETF.
based on BlackRock's hit rate, and there was just only
then
one
it's
ETF that got
99%.
rejected, right? So, and we saw that even with Bitcoin, they turned the tables around. Unless BlackRock decides to withdraw its ETF proposal, there's no reason why it is going to get rejected, in my
Mhm.
opinion.
But the thing is they're going to make you wait. It's not going to be like
Yeah.
we could have this certainty the same way we did with Bitcoin. Look how long they made it wait before it broke out. So trying to figure out when it'll break out, I think there will be signs beforehand, and we're definitely not there yet. All that said,
Okay.
so
So
that's your window of opportunity. If you think
Well,
of it this way, like there's a high percentage that's coming. You know what ETH is going to do when all of this demand is taken off the market, and suddenly there's new supply. It's more than likely going to go to all-time highs within the next year or two. So we're sitting.
That's
over
why I
50%.
want to wrap up this conversation here and really our trading conversation today around the what would you do? What's the ideal scenario right now sitting today? Let's say you have no exposure to Ethereum and you've got dry powder, and knowing everything that we just talked about, high probability in ETF coming in the fall. We have TVL tourists that are actually taking away interest from Ethereum. We have options traders that are keeping volatility low, and we don't really have a capitulation event necessarily. External ones were off the table for the moment. We don't have anything that's going to say BTC is going to crush ETH in the near term, and we're closer to the bottom than we are let's say the top of that range. So how do you play this, right? Can an investor really just start to DCA into Ethereum? Does it make more sense to start looking at options?
Your easiest way to do it, right? If you just want to do this in the least risk way possible, is you buy the Grayscale ETH Trust, which is still trading at almost a 20% discount to spot ETH, right? So you know that gap is going to close over time and you're almost guaranteed a profit there. You could hedge it with futures, or like we said, the volatility levels on ETH are very low. So to even buy put options to hedge against your ETH position, that's an easy way to do it. Very low risk, right? And obviously just buying spot ETH, you can't go wrong with that either over time. If you want to get more exotic and add some risk, like the fact that volatility levels are this low on ETH, and we all have a pretty good idea of what's coming within the next year, I think you start looking out. Me and Ben Ben Lilly were talking about this yesterday. Just how cheap some of these December dated options are on ETH. It's pretty incredible. If you think of ETH's ability to move, if we get that kind of supply demand misbalance after an ETF, everything goes perfectly, you could basically get exposure to a full ETH at 2,800 for $441. That's how much these calls are selling for. So your break-even price is 3,200. ETH's all-time high is 4,000. I think it could go well above that by the end of the year. So I think these are just like your high-risk play. I think this is it. You lever up with far-dated options, dated towards the end of the year. You can hedge it with some shorter-dated puts, say in March. And I think you just wait for that perfect storm to arrive. And I think this is a good level to start looking at those and averaging in the longer term.
Okay, so there you had it. You had a play that you could do on the spot side, which is really the ETH, Ethereum, the Grayscale Ethereum Trust, rather than buying spot ETH. Then you have this option of options, which I'm guessing if we start to see those events play out at the end of the year, that's going to be a higher profit, but as you pointed out, higher risk, because those you'd either have to roll those with additional premium, or allow them to expire or to close them out ahead of time.
I think June is the date that's floated for ETF approval now for ETH. I think there was a headline that came out about that said it's likely to be approved by June. So if you think about you're buying these options this far out, ETH could run up above 3,000 by June, right? We saw what happened with Bitcoin, is that it ran up in the 2 months prior. So say you get that spike in June and we're over 3,000 before the ETF comes, you can basically sell shorter dated volatility calls against this. So say we're at 3,000 by the day the ETF launches. You can continue to hold this position and sell shorter dated calls for, say, June, September, et cetera, against that, and capture that yield while still maintaining this primary position, especially if you plan to exercise it at the end of the year. Like you think ETH is going to $10,000, these options would be worth over 7,000 and change each, right? And the whole way up, you can continue to harvest volatility premiums as we see like the IV levels rise in anticipation of an ETF. There's going to be many opportunities that come up if you get into this position early. So I think it's a very good risk reward at these levels due to how the market's not priced for it at all. Like it's not priced for ETH to go back to all-time highs or anywhere near it this year. And I think there's a decent probability that we do. So I think that's your opportunity as well.
Sounds like a fat pitch to me. Benjamin, weigh in here.
JJ. So with BTC, if you remember, we've had these conversations earlier as well on how if you were looking at a long-term play for BTC, you could look at Coinbase, the mining stocks, MSCR as betas, and take up options for, let's say, March 31 expiry 2025 or something like that. And because it's cheap and it's also worthwhile taking those type of long-term plays accumulations, because the odds of that working out is still very high, right? Are there similar stocks for ETH? Because I've not looked into it, that's why.
No, not that I'm aware of. There might be some really small cap tickers or things like that, but nothing that I know of that tracks with ETH, other than like obviously Coinbase and whatnot, but nothing ETH specific.
Right. Yeah, Coinbase is basically a bit of entire crypto market, but it was while we were having this conversation, I was thinking of, probably there's something on ETH if we could take up, but looks like nothing.
The beautiful thing about those betas too, and this is something that we meant to touch on in the last episode that we discussed offline, is that they get so overstretched when there's large sell-offs in Bitcoin specifically. Like one thing we were discussing is last year, towards the tail end of 2022, when MicroStrategy was like in the gutter, right? It was at 130. And I think this is an opportunity that will rise again if, say, Bitcoin goes to 30,000 or below. So when MicroStrategy was trading around here, you could sell in the money puts that were trading for $2,000 to $3,000 over intrinsic value that were longer dated, because the market was so anticipatory of it falling to zero and wanting to short. The scales became so over tilted that basically you could sell a $500 put in the money that had it priced at had MicroStrategy's intrinsic price is like $100. So there was 3,000 of premium that you could just pick up. And then as it continued up, those puts just became worthless over time. So I think similar plays will arise, and there will be those fat pitch opportunities in options if we get a deep reset that you can just capture that volatility and then use it to additionally add calls and things like that and level on risk. But it's not here yet, so it's just a matter of waiting for those misbalances to show themselves. But they do.
And knowing how to play those, which is something you talk about in your options video. Is that right, JJ?
Indeed. Yeah. Nice segue.
So tell everyone what your last options video was and what the next one is, so they can get ready to watch and what they're going to learn from it.
So the first one, we were just discussing kind of volatility regimes within Bitcoin, how they happen on a repeated basis. And there's prime areas to become an options buyer or an option seller. So it seems like we're kind of at the tail end of this vol selling regime in Bitcoin. And I think by June or so, post-halving, we're really going to see an expansion of volatility, and that's going to bring some nice opportunities with it, which we go into in the video. And it's pretty good content. We work pretty hard on it, so tune in for sure. It's going to be a good listen. A lot of alpha.
I'm excited. If you're the sophisticated trader and you want to understand various ways of playing the market, I think these videos are unmissable. It's something you got to see, as well as hearing from people that are deep into the market, looking at screeners like Benjamin. All of this can help get you a better perspective on the market. I think with that, we're going to wrap up. As we do, I'm looking at the numbers. BTC and Ethereum continue to look pretty flat, up about 1%. As we said, we expect this market to continue to kind of stay pretty flat. And we'll see if that changes at all as we go into, as we head into the next week and we have our next show on Tuesday and Thursday. Gentlemen, anything before we wrap up?
No, that's all. Keep an eye on what happens here at the 50-day MA. It's looks like we're encroaching on it. So break above 43,000 could be pretty bullish here. Let's see what happens.
Well, we'll see. We're gonna be coming back next week. For all those who joined us today, thank you. We appreciate you having us, taking a little bit of time with us, and hope you enjoyed some of the commentary. Especially, I know I did, as we started talking about Ethereum, how to play that. But with that, JJ, Benjamin, thank you for joining us. I look forward to our next conversation. And I'll leave you with the same PSA I do every week, which is keep some dry powder and stay safe out there. This is Marconi White signing off.